Hello everybody, my name is True Demon and I'm the Devil's Stockbroker. In this video I want to bring you an update on XELA stock, do a little bit of technical analysis on what the company's currently doing on its charts, and look a little bit at the fundamentals one more time, as well as share with you an interesting piece of news. Not only is there some insider buying, but there was a bit of a hidden message hidden just from yours truly within those purchases. Let's get into the video. XELA started the day a little bit down from its previous close on Thursday, reaching a new low, down 8% on the day to 13.56 cents at the low point, before it started making a new high, ripping back upwards and heading for the top of its current symmetrical triangle pattern that it's been establishing over the last trading week. Right now, XELA is down after hours at around 14.85 cents. Not unusual for what it likes to do in after hours. Typically, the moves that it makes in after hours are pretty large swings going back and forth. But what we've seen consistently within the stock is constant buying, 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 buying. And even the insiders of the company are starting to show some interest in buying back some of their stock as well. In terms of the technicals, what we're seeing on the volume shelf is that there's a consistently growing level of support at each new price level between 13 cents up to 13.50, up to 14, and so on. The higher lows that we're establishing, coupled with lower lows after this large impulse move, signals to me a bullish symmetrical triangle. This big move to the upside is showing that we have a lot of interest that was brought into the stock all at once, most of it coming shortly after I did my updates, and then bringing the stock back down to the bottom of this. We've consolidated and started to make this narrowing range of trading. So now that we have gotten to almost the very tip, I'm expecting for that consolidation to get tighter and tighter still before breaking out to the upside. On a longer term trend, XELA's got quite a bit of interesting price targets coming up for it here in the near term. After getting rejected from its most recent high at around 23 cents, XELA sold off and consolidated down in this area just below $1 before it made this new rip up to higher highs. Interestingly enough, it's formed a bit of a cup and handle pattern that you can start to see forming here. It hasn't quite played out yet and seems to be consolidating downwards still, but at least these higher lows give us some faith that it's not quite done yet. Looking at it on the daily chart, you can see the cup and handle is a little bit more clear. So currently, this big swing to the downside, followed by a rapid impulse move to the upside, and then quick consolidation into a bullish pennant, gives me great conviction that the stock isn't done moving yet, and this is just the least of the prices that we're yet to see. Bringing things over to Ortex very quickly, we see that the days to cover has been slowly going down as a result of the increase of volume happening in the stock. The on-loan shares has gone down over the last several months, but it's just recently had a quick pop showing that the on-loan has increased to approximately 8% of the free float at 33.92 million shares on loan. The estimated short interest is sitting at 11.13, and the cost to borrow has been trending upward for quite some time. It took a hit very briefly, and it's still pretty low altogether, but the rising cost to borrow as shorts are getting into more positions, trying to hammer the stock down and get it back under control, is very evident when you see this chart laid up against the bar chart for the security lending volume. Something else that I've been keeping a close eye on is the failures to deliver and to see if XELA goes on the threshold list, which we haven't seen just yet. But as retail continues buying and buying and buying and holding and holding and holding these shares, locking up more and more of the float over time, I expect failures to deliver to start to rise rapidly as the stock trends upward and stock gets harder and harder to borrow. The utilization has had quite a bit of a spike as well, jumping up from 30% all the way up to 50% just recently. It's now currently sitting at 52.55% utilization. So right now, more and more of the lendable shares is quickly being exhausted. Something else that I have been paying close attention to, which you can't see on the screen, is that the margin requirements for short positions, according to Interactive Brokers, is sitting at around 1,666%, which, I'm sure that number's totally a coincidence, but In any case, that's a lot of margin. It's a very expensive margin requirement for any stock. Having to hold enough margin to cover 16.6% of your notional value of your short position in any stock is restrictively and prohibitively expensive, requiring you to commit a significant portion of capital and equity for your margin trading just to hold a position intraday. That's quite significant. And many shorts, I suspect, will not continue to do that, especially as the price moves upward. It's going to be less and less worth it and puts them at significant risk of margin calls, especially if the stock continues to make pushes back up to 20 cents that it reached in pre market trading just 4 days ago. What I'll also point out is that despite the moves as of recent, the average loan's age hasn't really changed. The average days on loan is still quite significant. So many of the shorts that are in these positions right now have been holding for a very long time, more than 2 months on average. So those shorts that have been here for a while, seeing the price down this far, eh, if I was in their position, I wouldn't really be thinking about staying there for very much longer because, I mean, how much lower can it go, right? The most that you can make out of this stock is for it to go completely to zero. And yes, many institutions take a huge, huge tax cut, which you're able to write off because technically they never air quote closed the position. The stock just simply stopped trading. So take that for what it is. But in any case, for those shorts that see the price starting to do this with increasing retail interest and the company continuously improving its balance sheet, kind of looking like it's not such a great idea to hold the short position, and maybe it's time to start thinking about taking profits. I mean, after all, looking at this chart and seeing where most of the shorts got into their positions, starting at around the 14th of February, where the price was trading at a high of 86 cents, trending down as the short pressure got heavier and heavier and heavier and heavier, bringing the price all the way down to a low of 9 cents. 9 cents, really? And you still didn't take profit? That's a huge profit gained on those short positions. Why would you be piling on now of all times when the company just seems to be at the cusp of a major reversal of trend? But I'm not in the mind of the shorts. I don't know what they're thinking, and I don't know if they know something that we don't. So I'm just going to go based off the information that I'm able to collect and see if maybe I can glean a little bit of additional information from what I can see. So here's a little bit about what I see. This is the short exempt data from our Scourge bot here at Hell's Trading Floor that we can see. The FINRA data shows that short exempts have been very consistently high in XELA relative to its trading volume. We see that there's been a lot of volume in it recently, especially starting on the 13th of July, where the price had hit its low of about, it was the day after that it had hit its lowest low of 9.23 cents, and it popped up just a little bit with a huge amount of short volume as shorts continued either piling on or taking profits. But what I found interesting was that the short exempt ratio was still hovering at around 1% as the short exempt volume grew to match the total short volume in the stock. And right now, looking at the short volume, we can see that the stock has been trading almost 50 to 60% of its entire float. Just on this one day on July 18th, it traded 276.2 million shares short. That's a little bit more than half of its total float of 450 million, if I recall correctly. And the short volume the next day was 300 million, which is even more percentage of its float. And you have the short exempt volume matching up at a 1% ratio on each of those days. These short exempts, while they may have been located, have a chance that those shares may not have actually ever been delivered, which means that these could be failures to deliver in the making. We've only been trading in this stock for the first trading week, and what we've seen is that when we catch them at these lows, the stock has a chance to run massively the following week if market makers are not able to cover these shares that they had sold short without locating a lender previously. However, we do know that utilization is still above 50%, but it's not high enough that they're going to have difficulty locating shares. But one thing that I want to bring to all retail traders in XELA's attention to encourage you a little bit to hold on to your positions. Not that I'm telling what you do and not that I'm here to give financial advice, but recognize that as more and more of the flow continues to get locked up, you'll see the shares on loan in Ortex continuously rising. Right now, we're kind of reaching a bit of an equilibrium, but the short interest is still going up. So right now, I expect to see a change of trend here in the very near term. When we start to see the on loan shares starting to rise rapidly, then you'll know that they're having difficulty locating shares and getting a better price. And that's going to have to be passed off to the books for the market makers who are continuously filling these orders. That as long as retail continues buying and holding the stock, market makers are going to have a more and more difficult time executing improved prices while simultaneously making profit themselves because the bid is rapidly outpacing the ask. Right now, we're in this phase of consolidation, but I really do think it's just the beginning. After all, looking at all the technicals just in this one snapshot here for the last month, we can see that XELA has been just pushing and pushing and pushing and now consolidating on this bullish pennant for the last 3 days. It gives me a lot of renewed faith that this company isn't quite done yet. The last thing that I'll leave you with is the current put call ratio for XELA is extremely bullish, with 96.3% of all options against XELA being on the call side. Right now, almost all of these calls have been consolidated at the $1 strike price for all time frames and expirations. So between August and January of 2024, there's a grand total of more than 180,000. That amounts to approximately 18 million shares worth of calls that are just sitting at this strike, waiting to trigger a massive gamma squeeze. And it's only been growing, and it's been growing faster and faster and faster, especially on the January 2024s and the August strikes. As this chain continues to grow and grow, I suspect that we're going to see retail getting more and more excited. But I encourage people to look at this data and pay attention. As it currently stands, just between now and August, at $1 strike, 4% of the float would be in the money. And that would require a massive amount of delta hedging. Probably not enough to send XELA to the moon, but notice that we're trading very far away from that $1 price range, and this call chain is just growing more and more out of control. But also keep in mind, this is only for this particular strike. As the company's outlook continues to improve, I expect that more and more institutional investors will start looking at this company and considering taking a long directional position in order to catch its reversal move to the upside. And it seems to me that insiders are getting in on that action while the price is so juicy. Before I get to that, though, I want to point out something that happened recently where XELA had announced that it was partnering with the Dean Fossey Gorilla Fund in an effort to protect mountain gorillas. Um, Interestingly enough, this is the same fund that AMC's CEO Adam Aron had partnered up with in order to provide some proceeds to the Gorilla Fund in order to save endangered species of apes and gorillas, which was a big move that was made by apes on social media during the time when AMC's short squeeze was being pushed. And as as Benedito Alcieri puts it, XELA seems to love apes. But that's not the only interesting part. I had actually responded to this and told XELA directly, apes see you, XELA Tech. We won't abandon you as long as you treat your retail shareholders with respect. Get your Class A stock compliant with NASDAQ, file your extension appeal, issue a buyback if you can, and don't dare dilute on us again until we save you. The very next day, this filing had hit, and what I saw to my surprise is that the day that I had sent that tweet, the chairman of XELA Technologies, Parchada, made a purchase, a direct acquisition of shares for a total 666,666 shares. That's a very, very interesting number to choose. Currently, Parchada owns a direct investment of 914,161 shares, which is currently worth roughly $137,125 thereabouts, based on the current trading price of XELA at around 15 cents. It was just interesting to me that immediately after I had directly addressed their company's investors desk, I've made multiple attempts to reach out to them. I've brought to their attention multiple times what I suspect is going on with their stock, and you know what? This is an interesting answer. So, Before we completely wrap up, just a couple last minute things to mention about XELA. Keep in mind that it does need to achieve listing requirements of NASDAQ. As of right now, before the 8th of August, that means that by the 26th of July, XELA needs to be trading above $1 for 10 consecutive trading days since that date in order to return to NASDAQ compliance in order to avert a delisting. However, XELA does have a 180-day extension that they're allowed to appeal for in order to get compliant by next year. So XELA still has plenty of options in order to get compliant. One, they can issue a reverse split, which is not ideal, but definitely within their means to do so. This would reduce the float, probably bring the stock price back up above $1.50 or thereabouts, reduce the float by a drastic amount, and give shareholders a chance to reevaluate once the price levels at a new area of support with the new reverse split stock. The other possibility is for the company to start issuing a buyback of shares and return some of those authorized shares to its treasury, where it can consider selling them at a future date or begin to sell more warrants in order to receive additional funding in the future as needed. Right now, the company's pretty flush with cash. According to their balance sheet, 82 million $82 million worth of cash on hand is sitting in their books. So they have the potential to buy back a significant portion of their shares as they've been doing a little bit better with their business. And I suspect that they may be announcing a profitable quarter, maybe not in this coming quarter, but possibly in the third or fourth quarters of 2022. All of those would be excellent signs showing great strength in the company as it continues to achieve new customer contracts, reduce its debt, securitize and refinance its existing debt, and defer its obligations, reducing its liabilities and increasing its assets over time as they develop the business and turn it profitable. So, for those who are currently concerned about a reverse split or a possible delisting, it's not a certainty right now. There's still plenty of options that the company has to avert both of those scenarios. And I suspect that they'll look at other alternatives in order to bring the company back into NASDAQ compliance. And they also are able to ask for more time in order to do so. So the sky isn't falling. It's not the end of the world. There's plenty of time left. And right now, the stock is looking extremely bullish in the short term. And I have some pretty high expectations for what it's going to do next week. But that's going to wrap up this video. XELA looking extremely bullish going into next week, which I am looking forward to tremendously. I want to thank you for taking the time to watch this video and recapping what's going on with XELA stock with me, and I look forward to seeing you at the bell on Monday. But until then, have a hell of a weekend.